I want to talk for a minute just about energy and really how this kind of relates into this energy transition. And so, the United States and Europe, basically, and Davos, it's like Obama, Biden, Euro, Davos are like completely bent on transitioning to this, green, renewable, sustainable, whatever they call it, energy economy. And, to the point that you were making before the break and talking about the U.S., it's ours to lose, so to speak, and that, we're God blessed where we have the best arable land and we have the best defenses, but we also have energy. Now, China doesn't have any energy. They have to import 85% of their energy, but the U.S. has energy. Europe also has energy. There's a lot of natural gas over there as well. But the U.S. and Europe don't want to get it out of the ground. And it's sort of interesting if you look at so we've depended on Saudi Arabia protecting the dollar with oil. We could just, the U.S. could just get the oil. We were the largest producing nation at one point. But now in this green transition, it's almost like, well, let's just give all the energy production to China, which doesn't have any energy, but they produce like the solar panels, they produce the windmills and things like that. So I'm curious about that. That seems kind of interesting. And then the other thing is, so now we're kind of under attack from OPEC, meaning the Fed is trying to fight inflation. They're trying to crush demand. But then OPEC, the oil-producing nation, said, well, we'll just lower our production of oil. And we can probably lower our production of oil faster than you can crush demand. And let's see how that works out. And what can the U.S. do to protect against that if we won't pump our own oil out of the ground?
Yeah. Well, the ESG stuff's been fascinating, something I've tracked a lot with a lot of the podcast guests that I've had. And I think the U.S. is the number one energy producer in the world in a lot of ways, despite of ourselves. And I think the key there is personal property rights and some of the freedoms that we are guaranteed via our Constitution and the way this nation was set up. In the U.S., which is different from almost all the rest of the world, individual, people have the rights to own the minerals in the ground. So it can be owned by, landowners, farmers, people that have had it in their family for generations. Investors can own the minerals, companies, things like that. And so we have the ability to extract the resources, and then the royalty owner, mineral owner, whichever you want to call them, they can then get the proceeds for that. Now, we also have federal lands, and we develop oil and gas on that as well. But the rest of the countries in the world, it's pretty much nationalized and owned by the government. And so in the U.S., we were able to foster an incredible amount of innovation with the Shale Revolution. For those of you that don't know, the last 15 years, we've unlocked just this tsunami of new natural gas and oil, and we've really become the dominant player in the world. And I think I would attribute that mostly to these personal liberties and freedoms that we have to own those minerals, which has then allowed a lot of small entrepreneurial companies to create innovation and to basically take the world by storm. OPEC, sure. And that's despite our government not wanting it, or at least half the government in terms of when the Democrats are in power. And then you've got now this ESG movement, which in a lot of ways has a lot of collectivist undertones around, hey, the world is ending. I'm not going to sit here and debate climate, but I will say that the undertones are there's this, catastrophic emergency coming, and that, only the government and these other technologies that wouldn't make sense economically on their own, and I'm talking about renewables, they would not make economic sense on their own, so now they have to be subsidized, and we have to regulate away oil and gas. And so back to what we were talking about earlier with the BRICS countries, these countries like OPEC or Russia, they're looking at this and they love it. It's like, hey, stop the U.S. from being the number one superpower. Well, a good way to do that would be to stifle our energy production, our energy innovation. And so Europe has done a great job of killing that industry for them. They do have oil and gas, and outside of a few areas, they're really not producing what they have. They've banned fracking. They've banned a lot of the innovation that we've done, and they've tried to lean in to these renewables, and it's made them less energy secure, which has made them depend on countries like Russia, which has given Russia a ton of power. And really one of the main reasons why I feel like Russia felt like they could launch into the war in Ukraine was because they had that power over Europe, given that they were supplying them with a lot of their energy. And so OPEC now sees that this ESG movement is taking hold. And it's not just ESG. I will put a little blame on the oil and gas companies too in the U.S. We got so good at producing it, we crashed the prices the last 10 years because we produced too much. So the returns weren't stellar also, but that was another convenient reason for investors to leave. And so OPEC sees us now as less of a threat in terms of market share because we're not growing production like we once were because of these capital constraints that are being put on by the BlackRocks of the world trying to stop us from getting funding, suppressing the stock prices of these companies. And therefore now OPEC says, you know what, we can cut back production and we can raise the price of it because we're not scared of the U.S. Continuing to grow at the pace that we've gone on. So there's a lot of nuance in all these topics, but ESG and OPEC and power and geopolitics, it all plays in, and it's just a really fascinating space that we could talk about for a long time.
Do you think, in addition to our own attack, like the ESG and policies, things like that, Biden administration shutting down oil and gas leases, et cetera, but on top of that, as the Fed continues to raise rates at this breakneck speed, they're also putting capital constraints on the oil and gas industry, which is very capital intensive. So even if the Biden administration said, okay, let's turn the spigots back on, let's get the oil and gas out of the ground, there's still capital constraints because of interest rates being so high.
This is like the paradox of rising interest rates. Like they rise interest rates because if you're a hammer, everything looks like a nail. They're trying to kill demand. But the key when it comes to a lot of the things that we need, right? Like you mentioned Luke Gromen earlier. He said before, you can print dollars, but you can't print oil. Well, the problem is we also need supply. So it's not just a demand problem with inflation. It's a supply problem. And whenever you raise rates and it makes capital, the credit, contracts, credit cycle contracts, it makes it harder for people to get access to capital. Borrowing costs are higher. Service costs are higher. A lot of these service companies that, for example, provide drilling rigs or provide crews that go out there and, pump these wells and get them online. These guys are very tight cash cycle businesses where they need lines of credit. They need to hire people. They need to advance money. They have to buy equipment. They have to buy things that require them to have credit. And as rates go up, it makes it harder for companies in these capital-intensive businesses to grow supply. And so in some ways, even though they're trying to stifle demand, it will have a ripple effect on the supply side as well.
Yeah, for sure. Yeah, it certainly makes them harder. And then you have the changing supply or price of the money. So then it's like, one, it obviously going up makes it harder, but two, not knowing where it's going to go creates a big problem as well. And it really limits our ability to change that. Another thing that I'm seeing happening is kind of off of Zoltan Pozar's thesis about this kind of Bretton Woods 3 type of a situation where we kind of basically had commodity money, which was gold and then a gold-backed currency. He argues in 1971 we got off gold standard, went to this kind of free-floating fiat currency he calls inside money. And now we're going back into this commodity money type of world. And so we kind of see that central banks are buying more gold and trending gold buying up and trending U.S. Treasuries down. But also he argues that nations would want to hold their commodities in the ground. And so some of this might be like sort of that, right? Which is like, well, why would we continue to pump all this oil out of the ground and put it into whatever fiat that's all basically at the same risk versus why don't we just hold the commodity in the ground?
Yeah, I mean, there's an argument I've seen, not that I love all of his takes, but I think I saw Charlie Munger speech that he gave where he was saying he didn't want us to produce our oil because he knows that he has the reality to know that we're going to need it for a lot longer than people think that we're going to need it. And he's like, to the extent that we don't need it today, he's like, this is a power base for the U.S. So the more that we produce, the more that we drill our best inventory and the best rock that we have, that's less resource we have to produce into the future. And you mentioned maybe the death of the dollar might be exaggerated. Well, the death of oil and gas is certainly exaggerated. I think peak oil demand is way off into the future. There are billions of people that wish that they had the lifestyles that we have, and they're not there yet in terms of these other third world countries, and they want to be there. And there is no silver bullet to power all their stuff on solar panels. It's just not going to happen in the near future. Nuclear power does provide some hope for a future where we could have a lower carbon, more abundant energy, but that's not taking off either. In fact, that industry is shrinking in a lot of ways. So we're going to need these products. And if you're OPEC, it's the same dynamic. You've got a lot of power. Saudi Arabia knows that their reserves aren't unlimited. OPEC's had issues raising their production to meet the quotas.